Ever wonder how the wealthy pay less tax without moving countries? There are 5 completely legal, transparent ways that they reduce tax even when living in high tax countries like Canada or the UK. So in this video, I'll show you the 5 ways to legally reduce tax wherever you live, so that you can better understand how to protect your wealth and have the freedom to live wherever you choose. Nothing in this video is advice of any kind. It is for educational purposes only. Now, let's start where every entrepreneur feels it first. If you're an entrepreneur making serious money in Canada or the UK, you already know the frustration. You create the jobs, you take the risk, and somehow the system still treats you like the problem. The tax code wasn't built for you. It was built for employees, predictable income, no risk, and no upside. So when your business scales, you get penalized instead of rewarded. And that's why so many founders feel trapped, paying more with no clear way out. But here's the truth. It's not your income that's broken. It is your structure. Let me show you what that looks like in real life. One of my clients, we'll call him David, runs a consulting firm out of Toronto. $300,000 a year in profit, with a remote team, clean books, but every spring, almost half of his profit vanishes to tax. He was told the same thing that you've probably heard. You should move to Dubai. But David didn't want to move. He wanted control. And that's exactly what he got. But not by leaving the country, by rebuilding his structure. Before we go any further, let me clear something up. Everything here is legal, transparent, and reviewed by international lawyers. This isn't about hiding or evasion. It's about alignment. Because the wealthy don't beat the system by breaking any laws. They just understand them better. And once you see how this works, you'll realize why your accountant could never get you here. So let's start with the first thing that the wealthy do differently. They understand where their company is really managed and controlled. Most founders think that tax follows registration. It doesn't. In many systems, it follows management and control, where decisions are made and by whom. If part of your business genuinely operates elsewhere with real management, real people, and real documentations, that part can be taxed there, fully within the law. So David kept his Canadian company and added a properly run US entity where real work happened. Each paid tax where they operated. Everything documented. His overall tax burden dropped significantly, legally and transparently, without moving his family. He didn't escape the system, he built inside it, smarter. So now that you know where your business makes decisions, you need to decide how it's structured. Most founders mix this all into one company. Operations, ownership, assets, decisions. And that's fine until something goes wrong. One lawsuit, one bad client, and your entire net worth is up for grabs. The wealthy do it differently. They use 2 layers, an operating company that runs the business and takes risks, and a holding company that quietly owns assets, cash, shares, intellectual property. So if the operating company takes a hit, your assets stay safe. In David's case, his Canadian company becomes a supplier to his US company with real contracts, fair pricing, and real activity. One company earned, the other protected and kept. That is leverage by design. And once you've separated ownership from operations, you can start optimizing how the pieces work together. And here's where most people slip up. They set up multiple companies and move money between them for no apparent reason with no record. And that's how you get flagged. Every transaction must have a commercial purpose with clear documentation and fair market pricing. That is called arm's length, treating your companies like separate businesses, not friends with benefits. For David, we built real service agreements, deliverables, and invoices that matched. So when regulators look, the story makes sense. Your paperwork is your defense. Because every invoice is real, your structure can stand. And once your structure stands, it can start to work for you. You don't build wealth by taking profit. You build it by controlling when and how it is taxed. If every dollar flows straight to you personally, you're compounding your tax bill, not your capital. So the smarter play is to keep profits inside the company and reinvest before you withdraw. And that's what David did. He used retained profits to launch a new service line and scale, all before paying any personal tax. That is not avoidance, that is timing. Done legally and compliantly. The right structure lets your money work for you. before you as an individual taxpayer ever touch it. But there's one more rule that decides whether any of this lasts, because none of this matters if your structure isn't real. Paper companies may look good until the regulators ask questions. If there's no real work, no proof, then regulators can ignore the whole thing. This is called substance, and every structure needs it. Local managers, real decisions, and evidence. That's why you need to build a compliance file with board minutes, signed contracts, arm's length invoices, and records, so that when the questions come, your answers are already there. David's businesses do this, and that's why they stand firm, even under scrutiny. If you can prove it, then you don't even have to defend it. Still, not everybody listens, and that's where the problems start. A Canadian doctor came to us after setting up what he thought was the perfect family trust. The paperwork looked good, lawyers, deeds with stamps, everything. But when you mapped everything out, he still controls and benefited from the same assets. So on paper, it was a trust, but in reality, the only purpose of this trust was to reduce his personal tax. And that is what the courts and tax authorities call a sham trust or tax evasion. And that is jail time. The regulators don't care how official your documents look. They care about substance, purpose, and where real decisions are made. That's why you never buy just a setup. You need to build compliance systems that hold up when tested, because form without function isn't protection, it's exposure. And that brings us back to David. And this is what happens when you do it right. When David's system went live, everything changed. Before, half of his profit was gone. Every year, no predictability. Now, he operates across two systems compliantly, with stronger protection, total clarity, and the result is lower tax. His family stayed in Canada. His stress didn't. That's what proper structure gives you. Peace of mind that compounds. So ask yourself, does your setup give you the same clarity, control, and confidence? And if not, here's your next step. If you're profiting over $300,000 a year, then you don't need loopholes. You need a compliant structure and strategy. If you want to see what's legally possible for your specific case, you can book a private review with my team. We've done it nearly 1,000 times. Just click the link in the description below. We'll show you how a compliant international structure could work for you. Built correctly, verified by lawyers, and designed to protect your wealth. Don't relocate, don't gamble, structure strategically. Everything here is education and should not be taken as advice. Your situation needs a proper review with qualified experts. At the end of the day, the wealthy don't hide from the system, they master it. That is how they stay compliant and keep more of what they earned. Everything we've talked about today, structure, compliance, documentation, is the foundation, the part that nobody gets right. Once it's in place, the next question is simple. Where should your profit actually go to? Because if your company is still trapped in high tax systems like Canada or the UK, then you're compounding taxes, not wealth. That's exactly what I've broken down in a previous video, where I show you how entrepreneurs legally shift profit into the US, where corporate tax is capped at 21%, and how the wealthiest use that move to build leverage without ever leaving home. So if you want to go deeper and see how that strategy works step by step, then click the video on screen now. I'll show you exactly how to use global structures to cut your tax bill for life, legally, transparently, and without relocating. Because the step after that is sovereignty.